John, great to see you. While the music plays, we must dance. Love that. What sort of dancing are you doing at the moment?
A slightly nervous one today with,
exactly.
with equities down. Yeah, it's going to be a more volatile year. We said that from the outlook in November, in our CIO outlook, and since then that's turned out to be the case. That's kind of inevitable. We're getting later cycle, and as we get later cycle, you get this cyclical inflation pressure combined with the removal of quantitative easing, and nobody quite knows what the latter of those two does. It might be fine, or it might move the risk premium in risk assets, and that combination is bound to keep things more volatile this year. But while earnings growth remains good, and of course, say what else you like about the US tax changes, but they will boost earnings, and that will help the PE ratio somewhat. And from that perspective, while earnings growth remains, then we continue to dance.
Will you continue to buy the dips as you did in February, both in equities and rates? When do you stop buying the dips? Yeah, How far does this market have to go?
Yeah, so I think it's more if we see the fundamentals change that we would change how we think about it. So at this stage, actually, inflation hasn't picked up that much. We've got a kind of the Atlanta Fed nowcaster approach to GDP is now down below 2% for Q1. So that doesn't suggest a kind of an overheating economy, and that helps take a bit of the pressure off. And of course, the wage data hasn't continued as strongly as it did in January. So from that perspective, there's nothing fundamentally different to when I came on here at the end of December. It's the same type of dynamic. So from that perspective, we'll keep going while we believe in the fundamentals. But what I would say is, in the rate side, we obviously haven't seen a kind of further sell-off there, which highlights that this is a slightly different concern this time, much more focused in equities, and that to some degree that does reflect that this isn't a concern about US rate hikes in the same way.